off from the high point of the day. The advance decline ratio as well now is slowly ebbing off from being in favor of the advances. One sector that has seen a large period of lull in the last 1.5 years, but is expected to show a lot of promise in the months to come, is the travel and tourism segment. Let's bring on board now Mr. Kavinder Singh, the MD and CEO of Mahindra Holidays. Mr. Singh, thank you so much for taking our time on ET now. You know, if we talk to people, if we try to book a holiday ourselves, we find more often than not that the resort, the flight, etc. is either booked or it's a little expensive. That in itself shows an indication that people want to get out. What we are calling as revenge travel seems to be pretty real. Tell us what you've been witnessing, you know, since India has opened up in a more meaningful manner in the last couple of weeks. What have you seen, and also what are the inquiries like, the bookings like? Give us a flavor of that.
Right. I think to an extent, what you're saying is actually playing out in our own business. When I look at weekends, on weekends, we are fully sold out, and you know, we have 65 resorts opened out of the 70 that we have, you know, and we closed the month of July at about 72% occupancy, and the occupancies are rising day by day. And yes, there is a desire for people to travel more so. If you really look at, you know, few trends that we are seeing, that people are traveling in their own vehicles. They want to drive to nearby destinations. They also want to actually keep working while they are at holiday in the daytime if possible. And children are also writing the online exams. So there is now no season. We are seeing normally July, August, September is not a great season for travel. But we are seeing a very, very, you know, huge uptick in terms of people's desire to travel. And that's something that's obvious. And for the reasons that you mentioned, that the unlock has started now and people want to get out. And the other thing is that even in August, we are seeing a very good trend on occupancies, and bookings for the future also looking good in September.
Okay, so, you know, considering the fact that everyone wants to insert a little bit of work, a little bit of study during their holidays, I suppose apart from bed and breakfast, you're going to have to provide a strong Wi-Fi connection as well at, you know, your resorts. And Mr. Singh, right now, how many of your resorts are open? And I think you mentioned a number of 72% occupancy. Is that an average? How do you see that increase going forward as, you know, your bookings to pick up?
Yeah. So we have about 70 resorts in India. 65 of them are open right now. And so we are seeing about, as I mentioned, 72% occupancy. You know, similar levels are seen in August. Probably we will end up the quarter at about 74, 75% if I really look at it from occupancy standpoint.
Mr. Singh, such a pleasure to connect with you. This is Nikunj also joining in. At what point you start making money? Because you have a fixed cost, and the fixed cost will translate into operating margins only when you reach a threshold. While it's great news to hear that 50 resorts are opening, 74 occupancy, fantastic news. But are you reaching your break even?
So in our business model, there are multiple sources of revenue. So we are, of course, breaking even and more than breaking even. So, and I was just wanting to also mention to the previous question that one of the reasons our occupancies are slightly low, I mean, we would be above 80% had it not been for the Kerala infections. But coming back to your question, Nikunj, if you really look at the various, you know, income streams that we have an annual fee income stream, we have a membership fee income stream, and we have resort income stream. Occupancy definitely directly impacts the resort incomes. So resort incomes, if we are crossing 70, 75%, we are definitely doing extremely well. I would like to mention that. And because of the other incomes that we have, in fact, in the last year, in the last quarter, we had 51% occupancy and we still delivered profit. Not only that, we grew by about 13% profit after tax. Income grew by about 10% because there are other sources of income as well. So as a result of that, of course, our cash balance also moved up. to about 950 crores. We are a zero debt company, as you know.
Are there any second thoughts on how you want to take your global business forward? I'm not saying it's a problem, but it's a fairly large commitment. It's a commitment some would argue that does it make sense for you to keep?
Very interesting thought from you, Nikunj. Actually, the way we have been thinking now, our international business is based out of Finland, Scandinavian part of the world. And, over there, the best part is that while, last year we suffered because of the COVID, and we have seen that because of the very high vaccination rates and the way that part of the world conducts itself in terms of social distancing and COVID appropriate behavior, we are seeing occupancies upwards of about 85-90% in their hotels and resorts. So as a result of which, the July, August, September season, which is their peak season, is going on extremely well. And now coming back to a strategic view as to how we think about the international business, in the timeshare world, Holiday Club is a great name in the Scandinavian part of the world. We believe that the business is turning around the corner. In fact, we had seen very good results in 17-18 and 18-19. But then we had this some bit of pandemic in 1920 and of course 2021. Now we believe that when we look ahead, the business of Holiday Club Resorts actually is going to deliver significant returns moving forward. So we are actually quite optimistic. We have a great team over there, and we have been able to trim down the cost because COVID actually provided an opportunity to look at cost reduction. Plus, just to give you one more piece of good news, we actually opened our 8th resort during the COVID, and that resort is already seeing 85% occupancy in a place called Veramaki, which is just about a 1-hour drive from the Helsinki airport. It's a great sporting destination. All the Olympians of Helsinki get trained in that big, large sporting complex, and that's where this great resort is also located.
Now, every Mahindra company I know of is going through a process of strong capital reallocation change. How is that going to apply in your case? So,
if you really look back about, 4-5 years, if you look at our past, trends of performance, we are one company within the Mahindra Group which has year on year added cash to ourselves. We used to have about 26 odd crores cash. We are at about 950 crores cash right now. So we have actually remained debt free. We have added cash. We have grown our business. We have added Holiday Club Resorts to our kitty. And of course, I did talk about Holiday Club Resorts just now. So from a capital allocation standpoint, I think the group's mandate is very, very clear to all of us. And that's something that's wide in public domain. And we are well within those thresholds. Actually, we are well above those thresholds when it comes to the thresholds related to return on equity, etc. So we remain extremely prudent and cautious, even when we are right now looking at acquisitions, and some of them are coming our way. We are being extremely cautious as to the price that we will pay, the location that we will get into. And the other thing, of course, which is a decision that we have taken well before, is that we are not going to invest in any timeshare company in India or abroad. We are looking at growing our property portfolio because our properties need to grow. And I am on record that we are going to add about 1,400 to 1,500 room units over the next 3 to 4 years at a capital investment of about 1,000 crores or about 1,200. And for that, we don't need to even borrow, and we will have still cash growing. So that's the beauty of our business model and the execution excellence that with which we are working to create this great brand, Club Mahindra.
All right. What are you looking at, Mr. Singh, in terms of, if you are, of course, acquisitions, with travel really expected to pick up. Plus, let's not forget that I'm sure within the sector, it's the strong ones that survive. The ones that have had it tough or the smaller ones would obviously be a bit more vulnerable to the kind of crisis we've seen. Do you see any opportunity to perhaps pick up, to expand your portfolio?
Yeah, we do see opportunities, and the opportunities are just about coming around. In leisure businesses, actually, the rebound was very, very quick in Jan, Feb, March. Without even vaccine, even our own performance was extremely good. We delivered an occupancy of 85% on the operational basis. So then you realize that obviously the leisure has actually been able to do well as the unlock has happened, as we discussed right in the beginning of the interview. So at that point, and because of this situation, the properties that are today coming to us would also have to satisfy the criteria of reasonable pricing and the location and the type of accommodation that we would want. Of course, the location, destination, all put together. So in a way, our focus would remain to look at properties which are coming at the right price for us to grow our business, because we have a stated objective to grow our room units by about 1,400 to 1,500 units over the next 3 years. And acquisition is a part of that strategy. At the right price, at the right destination and location, we are quite open to looking at acquisitions. But we are very focused. We are not looking at buying timeshare companies. We are looking at growing our property base, which will help us to increase our member base, which will help us to increase our cash as well as profits.
Okay, all right. So we've got a few hints over there, and I think we'll wait then for you to announce some interesting names that you'll be looking at to acquiring at good price and geographies that you're interested in. Mr. Singh, you mentioned July, August, which is usually a lull period, has also seen a good amount of footfalls, a good amount of, bookings. Now things are going to get even more interesting because you're going to have lots of holidays. The festive season is upon us. The weather conditions as well across India is going to improve, so that further entices travelers. How do you see that sort of giving a boost to your bookings and your top line?
You are actually very right. If you really look at last year, the second quarter was about 30% occupancy. Of course, it was a different situation last time around. And the third quarter turned out to be 75% occupancy. No vaccine, October, November, December, we're talking, right? So we are right now already, knocking at close to 75, 74% in this quarter. So obviously, October, November, December is going to be better than this quarter in terms of occupancies because of the festive season, because of the fact that people would, anyway want to travel. So we are definitely seeing October, November, December as turning out to be another great quarter for us. If I were to even look at the trends of last year and this year, with the vaccination pace gaining ground, with the fact that we also have our people at the resorts vaccinated, the fact that Bureau Veritas has certified our resorts as platinum rated, all of this augurs well for us in terms of, the coming quarter.
Excellent. Well, Mr. Singh, I'm sure with many people wanting to get out of their homes, things will definitely look pretty good for the travel sector for you as well. Thank you so much for joining us today on ET Now.
Thank you.
Okay, and on that note, we're going to take a very short break, but when